guys, this is Adam from dodjit.com and this is your video briefing for the 22nd of June 2009. Now, I was looking at the charts over the weekend, and for me, I tend to look at the candles a lot and try to see the price action, try to determine where we're heading, where we've been, stuff like that. And basically I was just looking at this chart and it seems to me like a kind of boxing match. I don't know if you've ever seen a boxing match where two opponents are just like fighting each other. So the same type of thing is basically happening here between the bears and the bulls. And the price action isn't really going anywhere. If we look carefully at the chart, we can see we've got this upper resistance level roughly around here. We've got this lower support level roughly around this area around here, and we've got double support around here, which is the 200-day moving average. We've talked about this quite a lot, and basically you can see, look at this tight price action that was going on roughly around 2 weeks ago. The indices, they did break lower. Let's just erase this circle for a second. The indices did break lower and they came down to touch the 200-day moving average. And then look at these doji candlesticks around here. This is like amazing. This is a real battle between the bulls and the bears. And basically what it means is that it's just uncertainty in the markets. No one really knows where the markets are now going to head. If they're going to head higher, if they're going to head lower. I've mentioned this also on a few of the reports that, in my opinion, in order to receive some nice bullish action, I think we're going to need something a little bit more than economic data. I don't think it's going to cut it this time round. We could receive some interesting action this week from the housing data in the US, especially if we're going to receive a little bit more stability. Now, also what I want to show you guys is this. Look at the volume on Friday's session. This is a real positive thing. We've received this nice swing trade. If we use our Fibonacci tool roughly around here, we can also see that we're now smack on our 61.8% level. Basically, where are we heading, what we're doing? Nothing at the moment, nothing. We want to see how this is going to play out, and basically our trigger levels are going to be our support and resistance levels. So if we look just here, we've got this R roughly around here, we've got this support level. Let's just type this in like that. This support level roughly around here. So we've got the support, we've got the resistance. These are our levels. If we're day trading, then you can use those two levels to bounce off of. If you're going longer term, wait for a breakout. We are pro bullish trades at the moment, and we are starting to look for some nice setups. If you take a look at some emerging markets, also there are some nice trades on that. Let's just see how it plays out this week. We've got a lot of data coming out this week, a lot from the US especially. We've got an interest rate decision coming up as well. I don't think we're going to receive any major movement from the interest rate decision. I don't think they've got much that they really can do at this point in time. So let's just see how it plays out. Keep an eye out on that housing data. Let's move on to the next chart. And now the next chart is the FTSE, and what I'm going to do in this video is I'm going to focus on the major indices. I think we've spoken enough about currency pairs and it's all over the site. You can also check it out on our chart analysis page. Now the FTSE is actually acting exactly like the US stock market. We've got resistance up above here. We've got this fake out roughly around here. This is something you want to take into consideration if we do break to the upside. We've got this support level around here. Now, it did look like we were breaking lower, and then what basically happened, if we just move this up a little bit, this support level up a little bit, you can see we received this negative candle, this doji-like candle, and then this bullish white candle. Now, this type of chart pattern, this three candlestick formation, does resemble a little bit of a morning star pattern. And if you look carefully also, you can see the cross of the 50-day moving average of the 200. It's starting to appear. Looks like it's starting to form a little bit of support around this area. Like the other charts, like the S&P 500 that we've just shown, I would wait. I wouldn't really get into any positions at the moment. I would wait, especially if you're thinking of entering long positions, I would wait to see something roughly around this area right here for a nice breakout, because we don't want to get caught out on any fake outs like this one around here. So if you are trading the FTSE at the moment, keep a close eye out on the US market. They've got a strong correlation, and just wait for a breakout. Now, the last chart that I want to show you is an ETF fund. It actually tracks the Indian market. Now, I know we normally don't talk much about emerging markets, but this has been a big topic lately, especially over all the news, all the emerging markets, BRIC countries, stuff like that. And the Indian market is actually a market that I tend to follow, especially as one of the emerging markets. Also China. China is also a very, very good market to follow, especially with their GDP growth. Now, this chart I've brought up especially because, number one, it's one of the oldest ETF tracking devices in India at the moment, and also because of the technical patterns that it's presenting at the moment. You can see here we had this lovely gap up. This was really great. Massive volume on this gap up. And since then we've been like up, down, roughly kind of like the S&P 500, consolidating a little bit. If you look carefully also, you can see we've got this trend line going higher. And look where we are now. Look at this. Exactly on trend line support. And if you look carefully, we've also got this gap support roughly around here, which coincides with our trend line. So if you are trading the emerging markets, shares, ETFs, stuff like that, India could be a possibility. Obviously, if the markets are going to head higher, I'm talking about the overall markets, S&P, FTSE, we've done a few of them today. The Indian market is also going to head much higher. China is going to climb higher. So, you know, you've got a pick out there. Use it wisely. Just analyze the charts correctly. Let's see how it goes. This is Adam from dodjit.com.